In 72 hours, the world's economy faces a threat most people don't even know exists. Your smartphone? Gone. Electric vehicles? Dead. Solar panels? Worthless. Even the circuits powering AI right now? All dependent on one metal. And China just turned off the tap. What's up, everyone? And before you click away thinking this is just another precious metals video, stop. Because what happens on January 1st isn't about investment portfolios or shiny bars in a vault. This is about the invisible metal that runs your entire life. The one that's in your car, your phone, your laptop, the solar panels on your neighbor's roof, and the data centers processing every Google search you make. Silver. And in 72 hours, China, who controls 60 to 70% of global supply, is slamming the door shut on exports. The price? Already up 170% this year. The impact? About to get exponentially worse. So here's what we're covering. Why silver is the most critical commodity you've never thought about, what China's export ban really means for your wallet, and the one question every investor needs to answer before 2026. But first, smash that like button if you want more breaking financial news like this, and subscribe because what happens next week is going to be insane. Here's something that'll blow your mind. You've probably used silver a dozen times just today without even knowing it. Forget grandma's silverware locked in storage. We're talking about the world's most conductive metal, better than copper, better than gold, better than anything we've got. Every single circuit board, every smartphone switch, every solar panel, every 5G tower, every electric vehicle, they all run on silver. And here's where it gets crazy. The next generation of battery technology, solid-state batteries, needs even more silver. We're talking 700-mile range on a single charge for EVs. Revolutionary, right? There's just one problem. Global demand in 2025, 1.24 billion ounces. Global supply, 1 billion ounces. We're consuming 50% more silver than we're producing. And unlike oil where you can just drill another well, you can't magic silver into existence. Want to know why? 75 to 80% of silver doesn't even come from silver mines. It's a byproduct of mining copper, lead, and zinc. The remaining 20%? From dedicated mines that take 12 to 15 years to bring online from discovery to first production. So if you found a silver deposit today, your kids won't see that silver hit the market until they're applying to college. Meanwhile, manufacturers are already scrambling. Some are looking at copper alternatives. Others are raising prices. And Elon Musk himself warned the situation is not good, with a supply shortage between 100 to 250 million ounces. But here's the kicker that changes everything. January 1st, mark it on your calendar. Because that's when China implements the most restrictive silver export licensing regime we've ever seen. Here's how brutal it is. To even qualify for an export license, your company needs to produce 80 metric tons of silver annually. Only massive, state-approved, heavily audited producers get the green light. And here's the terrifying part. Beijing reviews these on a case-by-case basis. Translation? They can cut off global supply whenever they want. But why no? Think about it. China manufactures over 80% of the world's solar panels, a massive chunk of global EVs, and they're positioning themselves as the AI superpower. All of these industries are heavily dependent on silver. By restricting exports, China secures cheap silver for their own manufacturers while pricing out competition, gains massive geopolitical leverage on a strategic asset, and potentially uses it as a bargaining chip in future trade negotiations. And the market knows it. Traders are now paying a 7% premium to buy silver today rather than wait for delivery a year from now. That's not speculation. That's fear. Meanwhile, back in the West, we've been playing arbitrage games, buying up silver in London and New York just to flip it to China for profit. Essentially feeding the dragon that's about to starve us. Silver reserves are depleting. Production can't scale fast enough. And China just weaponized the bottleneck. So the million-dollar question everyone's asking, with silver hitting $80 an ounce, up 170% this year, is now the time to jump in or have we already missed the boat? Let's talk facts, not hype. First, historical context. Remember 1979? Oil shocks, runaway inflation, dollar crisis, geopolitical chaos. Gold and silver quadrupled before everything came crashing down. Sound familiar? We've got inflation concerns, geopolitical tensions, and a commodity supply shock all happening simultaneously. But here's a smarter way to think about silver pricing, the gold-to-silver ratio. This measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, a ratio of 60 means balanced market, 45 means time to buy gold, and 80 means time to buy silver. Right now, with gold at $4,500 and silver at $80, we're sitting at exactly 60. Translation: silver is fairly valued relative to gold. But this is where it gets interesting. This ratio assumes historical norms. What if silver's role has fundamentally changed? Think about it. Gold sits in vaults. It's beautiful, it's stable, but it mostly just exists. Silver? Silver works. It powers our modern world. 3 reasons silver could keep climbing. Industrial demand is rising, not falling. Electric vehicles, AI infrastructure, renewable energy, all growing sectors, all silver dependent. Supply is physically constrained. We literally can't mine fast enough to meet demand. And if dollar weakness continues or inflation returns, investors flood to precious metals as a hedge, driving prices even higher. Plus, there's whispers of a potential short squeeze. Some estimates suggest silver ETFs have created a 378-to-1 ratio of paper silver to physical metal. If banks need to actually deliver physical silver for every share they've sold, game over. But before you FOMO into silver with your life savings, hear me out. Everything I just told you, the market already knows it. The current $80 price includes expectations about January 1st, supply constraints, and rising demand. This is crucial to understand. Markets are forward-looking. They price in future events. So unless new information emerges that nobody expects, we might already be at peak pricing. Remember silver's 1980 peak? $50 an ounce. Adjusted for inflation, that's $150 in today's dollars. So yes, $80 today is significant, but we're not in uncharted territory yet. But here's the gut punch. If you bought silver at that 1980 peak and held for 45 years, you'd have lost 50% of your purchasing power even at today's prices. Let that sink in. And things could reverse fast if manufacturing demand slows, China negotiates export deals, alternative materials improve like copper substitution, or geopolitical tensions ease. Any of these scenarios could crater silver prices overnight. So what's my take? Silver is not your primary investment. Period. It should be a small part of a diversified portfolio, maybe 5 to 10% max if you're bullish on commodities. Think of it as insurance, not a lottery ticket. The old saying goes, buy gold for capital preservation, buy silver for capital appreciation. If you bought silver last year, congratulations. You crushed it. Take some profits. Lock in gains. But 2026? That's a different game entirely. Here's what I'm watching. Silver has transformed from a precious metals speculation into a strategic industrial bottleneck. That changes everything. When demand is driven by electrification, AI infrastructure, and energy technology, you get a price floor based on actual need, not just investment hype. That's powerful. That's different from 1980. But it also means volatility, massive, gut-wrenching volatility. So ask yourself this question and be honest. Will silver be a critical part of our economy 5 to 10 years from now? If your answer is yes, then China's export restrictions might just be the beginning of a much longer trend. If your answer is no, or if you're buying just because the price went up, you're gambling, not investing. Here's the brutal truth that nobody wants to hear. By the time a YouTuber like me makes a video about an asset that's up 170%, you're probably too late to catch the easy gains. The smart money moved months ago. But here's what you can do. Understand what's happening. Recognize that this isn't just about silver prices. It's about supply chain vulnerabilities, geopolitical chess moves, and the hidden infrastructure powering our modern world. January 1st isn't the end of this story. It's the beginning. The question isn't, will silver be higher next month? The question is, what does it mean when one country can flip a switch and disrupt entire industries? That's the world we're entering. A world where commodities aren't just traded, they're weaponized. So stay informed, stay diversified, and whatever you do, don't chase the hype. If you found this valuable, smash that like button. Subscribe for more financial deep dives. And drop a comment. Are you buying silver, staying away, or already holding? I read every single one. Thanks for watching. Happy New Year. And remember, in a world of manufactured scarcity, knowledge is the ultimate asset. I'll see you in 2026.